Okay, welcome to the Trading Nichols channel. I am into Forex. I am working on passing the FTMO challenge. I am into crypto. I'm into stocks. Many of my friends tell me I'm into way too many things at the same time. But if I don't always have something to buy or sell, I'm kind of bored. Today, let's discuss gold. Gold was on quite a tear all summer long. Everyone that loves gold was up and up about it. Even people who didn't love gold before were thinking about it. But let's be perfectly honest. Gold is not meant to be this awesome price action situation. It's fun when it is, but for the most part, it's supposed to be a hedge against when other things do poorly. If the US dollar does poorly, gold tends to trend a little bit better. If take my summer for example, I was making some money off of gold even when the stock market was cratering. So I was able to take some of my gold positions and sell them and therefore buy stocks in an opportunity I otherwise wouldn't. Is that hopefully I can put up a graphic right here. Move over a little bit, have space for the graphic. But gold has just touched its 200-day moving average. Everything comes back down to its moving average eventually. Chances are, as it touches it, bounces off. It had a good bounce today, December 2nd. It had a good bounce up. I kind of expect it to fall back down again. I don't think this is a momentum that can continue, but that's me. I think there's still probably a lot of people still worried about how it's been coming down and down and down, just like I've been worrying. Now, my one stock that's actually done better is a gold mine called Newmont Corporation. I bought them days or maybe a week ago when things were just down. I was afraid everything was going to keep going down, but I also didn't want to miss out on buying the dip. So I bought Newmont. I bought Agnico Eagle's down since I bought it. Newmont actually was able to do a rally before gold did a rally, which is nice because you're getting exposure to multiple things at once with Newmont. What's awesome about Newmont is it gives you gold. And believe it or not, they also mine a lot of silver. And their silver is a byproduct of copper. So they mine even more copper than they do silver. So they're giving you exposure to a lot of things. So now the reason why I like Newmont and Agnico Eagle is they're the most agreeable to the US. So if you don't believe me, take a look at Katusa's research about swap lines. See, there's countries that are swap line plus, and there's countries, all other countries are swap line minus. If you have a swap line, basically it means you can endlessly buy US dollars, no questions asked, but you keep having more and more interest. So I can see how some people might not be interested in being in debt to the US, but people that do have swap lines, even if they haven't used them, are saying we are fundamentally agreeing with US, and something that has never happened so far, knock on wood, with a swap line plus country is they don't repatriate their mines. That's what brutalized Barrick Gold, was it 4 months ago, 6 months ago? They just kept getting knocked down, and I kept buying them on the dip and selling them again. They kept knocking down even further. I got myself in a little trouble with it. But that's what happened to Barrick Gold. They have a higher percentage of mines that are in swap line minus countries. And what that means against them is that some of their mines, or at least one of their mines, so it freaked out investors, got repatriated to the country because of what's going on in the world. Countries are having a hard time with all the shutdowns. So they took their mine back. They basically stole all the money away from the investors and said, hey, free money for us. We're keeping your money, and we're keeping the mine. And we're having that money help our country. Okay? Screw the rest of the world. We don't care if this hurts our trust. We are repatriating this mine to ourselves, and that's it. So Newmont is actually a little bit weaker. Swap line plus was. I think it's somewhere around high 80s, low 90%. Maybe I can put up the actual percentage. I'll relook it back up. While Agnico Eagle is 100% mines in swap line plus countries. Most other mining ETFs for gold out there are going to be much more exposed to the swap line minus. Now, this is something that most investors don't think about at all. They don't consider the swap lines. It's something special that Katusa Research found out, and he has a decent YouTube channel. I only say decent because he only reveals so much because you have to pay him a whole bunch of money to get the deeper information. But I do I pick up little tidbits here and there for what he is willing to share from his research, which, to be fair, he spent a lot of money, makes a lot of money doing. You just need a much bigger account. He recommends having at least 50,000 in your portfolio to pay them to make more money with them. Anyway, so that explains swap lines. That explains Barrick Gold versus Agnico Eagle and Newmont Corporation for investing in gold mines. I actually haven't bought more back in to gold as an ETF. Like IAU is one of my favorites since I'm with webull and I have to buy. I don't fractionally buy, so IAU, it could be like $17, while I'd be at $170 if you bought like the simply gold, GOLD. But they all move with the price of gold, so it doesn't make much of a difference. There was one time during the summer where gold actually performed better than IAU, but I was like, man, to have one position at 10 times the rate versus being able to have micro control over it, I'd rather stick with IAU. While my wife, on her account in Cash App, she'll use the gold, and that's fine for her because she can fractionally buy all she wants as low as denominations of $1. So I fractioned it out by choosing a different ETF. Let's see. I forget which, but both are solid, at least surprisingly. Yeah, talking about Newmont Gold and Agnico Eagle in my notes here. Explain that. Talk about how Newmont's stronger because they actually move a lot of silver. They mine a lot of silver, even though they're known as a gold mine stock, as a byproduct of their copper. All that said, fundamentally, I think this gives Newmont quite the edge over a lot of gold mining stocks, be it diversification or dilution, if all you want to consider is the gold mining. So, in a way, Newmont's a more diversified mining stock. But it could be considered dilution if you don't want exposure to silver mining as well. Though this video is meant to mostly be about gold. Pan America Silver is a mine that I'm into, and it's still I'm still wondering if it's just going to keep coming down right now because it's below my lowest targets over the last few months, which could mean that it's undervalued, which is a good time to buy. I just don't know if it's going to keep undervaluing even more. Again, coming back to it, it's supposed to primarily be a hedge, and I use the gold mines and the pure gold and silver ETFs as a hedge as well. I've actually been a lot more successful than the S&P 500, and it's really proven true over the last month or so. Prior to this, I was pretty much just barely beating out the S&P 500. Why am I spending all this time trading full time when my my account manager that I pay for my Roth IRA is doing just barely better than the S&P 500? What's the point unless I really outperform the S&P 500? And what's really made the difference to me recently is my high exposure to the oil stocks. Those have just shot up like crazy. And the thing is, when they start to come back down, my experience with gold is that with oils, that they're going to keep coming back down. So I'm going to wait and wait and wait and to let them just keep coming down. I sell as I see them do their setup patterns on the oil to the positive side, but I hold half of back, sometimes 2/3 back for that ever increasing more that I don't expect to do regularly. So if a stock's doing this, I'm going to buy, sell on the regular swing trading, but I'm going to hold some back, some of those deeper buys for when it really takes off. Like with oil being down, I still added 1% here and 1% there to my portfolio because even when it was really low and it had did this recent takeoff because of the vaccines getting closer to approval. And by the way, today, UK has approved Pfizer's. And UK approved Pfizer's and BioNTech's vaccine for emergency use. Okay, so that's excellent. I haven't noticed any price action on these stocks from this. Nothing, short-term TA. The fundamentals don't seem to be making any difference as of today. Let me just check real quick. Pfizer's having another good day, but they've also had, for the last 5 days, they've just been on the up and up and up. 1, 2, 3, 4, 5 days of them being up since I sent my last buy limit order. Currently not in it right now. I already sold out. If it keeps going up, it's going to go up without me. I already sold it. No big deal. That happens sometimes. I'd rather take the sure win than again and again. Like I said, but if I have multiple shares in something, I will sell at the top, and if it keeps going, I can sell again. If not, I can wait for it to come back down and buy again. And that's actually another trick around your settled funds. If you always are in it, you always have one you can sell. Even if you bought today and it takes off today, you can still sell one, and it's not going to hurt you against settled funds. If you're not hurting your settled funds on webull, you are not going to run into PDF, even if you have less than $25,000 in your account, like I do. Okay, yes, be sure to get your 3 free stocks by using my affiliate link below for webull. All the stocks I have discussed are available there. Be sure to support the channel. And remember, this isn't financial advice. In order to advise you, I'd have to not only have that qualification, which I don't, but I also have to know your situation extensively. You do you. You put on your, like Ivan Onteco says, you put on your big boy pants. And if you hit the button, it is your responsibility for what happens next. You click buy, buy, buy. You click sell, sell, sell. The results, they're to your credit or your fault. Sorry, I haven't practiced doing an Ivan Ontek impersonation. But, you know, he says it all the time. You put on your big boy pants. You click the buy. The results, if they're good, they're on you. If they're bad, they're on you. Anyway, so appreciate the little artwork that my kids volunteered. There's actually a lot more I'm covering up over here that's a lot less attractive. You know, the kind of thing you'd be proud of if it's on a piece of paper and it goes up on your fridge, but if it's on your wall, you're kind of like, I need to buy some paint. But when are they going to stop before I bother buying paint? My assets feel safer inside of digital assets, earning 12% on... Down below, you get 20 or $25 in Bitcoin. So do I. It supports the channel. It supports you. It's also the cheapest place available and will find to buy crypto, excepting places where I don't recommend. Because, for example, AvaTrader, they have lower rates to get your Bitcoin, but it's a leveraged platform. And I think crypto should not be bought with leverage, because it's way too chaotic. I buy gold all the time with leverage. I trade it on the regular. Lately, I've been trading it less, but I had a good, forex trade on XAU, or gold spot price. It's basically the same thing. But that's neither here nor there. We're talking about gold today, especially since we're back down to the price where all the summer pumping of its prices. I'm concerned that it'll keep dumping. Now, hopefully I can create value. If I've created value for you, be sure to hit like. If you haven't been here before, be sure to hit subscribe. Up here is going to be the video that is most related. I have hardly anything on my channel. There may not be anything related yet. And down here will be the video that YouTube thinks you'd like the most. And in the meantime, slap me in the face and subscribe. Yeah, just keep slapping me. I like it. Slap me some more. I'm kidding. That's not the direction this channel's going.